Buying a house can be a nightmare for self-employed borrowers. Now look, I speak from experience. I'm a full-time mortgage loan officer and I recently bought a house and I work as a self-employed borrower. So I have perspective and knowledge from both a borrower and a lender's perspective. So if you're self-employed and you want to buy a house, you need to watch this video. Hey honeybees, welcome back to my channel, or if you're new, my name is Ciara and I do videos on finance and lifestyle. I'm a full-time mortgage loan officer and YouTuber, and I've helped hundreds of people to buy homes and build wealth. So I take everything I know and I share it with you in hopes you will build wealth also. Okay, so you're self-employed and you don't know where to start, but you want to buy a house. I'm about to break down for you step by step what you can do to ensure your home loan approval. Let's get into it. Okay. The first thing you need to do is get organized. Make sure that you're keeping accurate track of all your income, your gross income, as well as your business expenses. You really want to stay physically organized as well. You really need to ensure a simplified method of staying organized to ensure effortless tracking and accounting. One of the big pitfalls and things that make it a nightmare for self-employed borrowers to get a home loan is because there is so much documentation involved. There's so much information that you're having to turn in. Being organized is key, and being able to have a method or a plan of how you're going to keep everything organized and trackable is important. So something that I use and I recommend is a rapid receipt scanner. I use the Epson rapid receipt scanner and I love it. It's a really easy way to scan, digitize, and organize your receipts, documents, and invoices. And it's perfect for business owners. The rapid receipt scanner quickly and easily converts financial documents, invoices, and receipts into useful digital data. Now, what's really cool is that it integrates with popular financial applications such as Excel, QuickBooks, that's what I use, TurboTax, and it integrates quickly and accurately. I also really like this because as both a borrower and a lender, I do everything digital. As lenders, we cannot accept pictures of documents, which borrowers turn in all the time. They will literally take a W-2 and then take a picture with their phone. And that is not acceptable. These documents have to be digitized. They have to be scanned in. So that is another reason that I love this rapid receipt scanner. It's not just for receipts. You can use it for documents as a business owner, and when you are applying to buy a house. It just keeps everything digital and clean and organized. And actually, this is the only solution on the market designed specifically for managing receipts and invoices. It works by automatically extracting and categorizing data, and it seamlessly integrates with QuickBooks, TurboTax, Excel, and more. Now, what's super cool and super useful is that it turns paper documents into editable and searchable PDFs. So you can easily view, edit, and combine documents. And why is this so important? Found receipts could mean more money for you during tax time. So it's super important that you're keeping track of these receipts and invoices and really all your documents as a business owner. And I'm gonna link this device below so you guys can check it out for yourself. Make sure you're keeping track of how much you're bringing in gross sales, as well as what your business expenses are. And make sure that you're able to itemize these and put them into their respective categories. Meals have their own section, transportation, office supplies, utilities, office space. All of these different categories are going to represent your various business expenses. It's a lot to keep track of, so this is a really important part. Make sure that you're keeping really good track of these things. So make sure you have your own accounting method set up. A simple rule of thumb or way to set up your accounts as a business is to have an accounts payable and an accounts receivable. And also you want to make sure when you're using bank accounts that you're using a business bank account. So what is accounts receivable and accounts payable? Accounts receivable are the funds a company expects to receive from customers and partners. A company's accounts payable lists its short-term liabilities. So that's obligations for money owed to suppliers or money owed to creditors. So simply put, accounts receivable is when you're getting money in for the business. Accounts payable is money going out for the business. This is really the most simple way to set it up and what has been advised to me by multiple CPAs. Now, one of my hacks that I did when I was buying my house as a self-employed borrower was that I went and I opened up an account specifically for my home loan transaction. This is going to help you, especially as a self-employed borrower, in so many ways, because not only are you going to separate the funds from your business account, but you're also going to have the funds separate from your personal account. This is just literally going to be a savings, or you can make it a checking, but a savings account that you keep money in to show for your down payment and closing costs. And this is just a really clean, easy way to keep track of your funds. Now, when you are opening this bank account, make sure you're opening it at least 2 bill cycles or 2 bank statement cycles ahead of when you're going to apply. If you can, try to have most or all of your money in your account at that time as well. I say this because if you are buying a house and you are submitting bank statements, the thing we look for is large deposits. Anything that is 1% or more of the sales price of your property is considered a large deposit. So if you're buying a house for $100,000, any deposit that is non-payroll of $1,000 or more will have to be sourced, meaning we have to show a paper trail. We have to show where the money came from. And that can get really hectic for both the lender and the borrower. It can cause a lot of extra documentation. And then if you're not able to source some funds, that money is backed out of what we consider you having in your account. And if that brings you below the amount that you need for the home loan transaction, then that can cause you to lose your approval. At the end of the day, if you're able to have a business account or business accounts, a personal account, and then an account strictly for your home purchase, you can avoid making large deposits. You can have your money in there before it's 2 bank statements out so that it doesn't have to be sourced, or you can make sure that you are keeping track of documentation and you'll just have a really clean, beautiful bank statement to turn in when you're doing your home loan. Okay, so my second tip is to get a CPA if you don't already have one. And if you're not sure why you need a CPA, just think about the complexity of tax laws. Just imagine that you're doing it yourself and you're missing something or making an error that could really put you in jeopardy legally and for your business. Get a CPA. It's much better to get a CPA and pay them now than to be worrying later about a whole bunch of mess because you did it yourself and now you're getting audited. Trust me on this one. You need to make sure that you have a CPA. A CPA specifically can go beyond just filing your taxes for you. In order to maintain their professional licensure, CPAs are required to maintain an up-to-date status on appropriate tax law knowledge for the business they serve. They also have the ability to verify IRS and other compliance for you, which will ward off taxation troubles. What a lot of people really like is that CPAs will also have appropriate knowledge of various tax planning opportunities to help your business properly minimize its tax liability. And when it comes to the home buying process, I'm telling you this because during the home buying process as a self-employed borrower, having a CPA will save your life. During the underwriting process, the underwriter is going to request a variety of various documents that only a CPA can provide, or it's easiest for a CPA to provide rather than you trying to do it yourself. Instead of you trying to figure out how to create these documents and spreadsheets and ledgers, a CPA will know exactly what is needed and can get it to us instantly. Simply put, having a CPA is going to make your life easier, your business life easier, and your home loan approval process much easier. So my third tip is to make sure that you consult a lender before filing your taxes. And this is for a variety of reasons. The first being that your lender will be able to let you know if you will require 1 year of tax returns or 2 years of tax returns. There's various loan approval guidelines and underwriting guidelines that determine how many years of tax returns and exactly what documentation is needed for you. And not only that, but a lender will ensure that you are not seeing loss from 1 year to the next. If you are getting your income calculated based on 2 years of tax returns, let's say you're applying for a home this year, 2022, you would need your 2020 and your 2021 tax returns. Let's say you made less money in 2021 than you did in 2020. That's looked at negatively by lenders, and it's considered a loss, and you do not want that. So if you see a lender, they'll be able to kind of guide you and help you pinpoint ways to make sure that you aren't experiencing a loss when you file your tax returns. A lender can also pinpoint how much net profit you need to show in order to get approved for a home loan or to get approved for the amount that you want. So as I mentioned earlier, self-employed income is calculated by looking at your net income. So not what your income is by bringing in all your sales, but what your profit is after you've taken away all your deductions. So that means you have to be really, really careful about how much you're writing off and how much you're taking off in deductions, because this can actually hurt your chances of getting approved if you're writing off too much, because you won't be showing enough net profit. So a really great idea is, like I said, to see a lender before filing taxes, because not only will they be able to advise you how many years of tax returns you need, but also about how much net income you would have to show to get approved for the amount that you want. And lastly, consulting with a mortgage lender before filing your taxes is important, because then they'll be able to develop a rapport with your CPA. They're going to be working in tandem to get you through this home loan process. So they'll be able to relay lots of useful and important information that your CPA needs to help you file your taxes. You always want to make sure that you let your CPA know as soon as you decide you are wanting to buy a house, and then that way they can adjust their approach to filing your taxes accordingly. But getting with the mortgage lender before filing your taxes is important, because you'll be able to allow your lender and your CPA to team up to work together in tandem to make the loan process really smooth for you. The lender can give the CPA heads up on documents that may be needed, income that needs to be shown, tax returns, like the amount of tax returns, schedules. They can give all sorts of information to your CPA that is going to be really useful for filing your taxes if you want to get approved for a home loan. Okay, the fourth tip or step is to file your taxes, and make sure this is after you've seen your mortgage lender. And when you're filing your taxes, you want to make sure, like I said, that you're minimizing your deduction. You also want to make sure that you have payment plans set up for any outstanding tax liens or bills. This is so important. As a self-employed borrower, if you owe taxes, make sure there's a payment plan set up, and also make sure that you have made at least 3 of those payments before applying for a home. This is because certain loan types, like FHA for example, you have to have made 3 on-time payments on your tax bill before being able to close on a house. And you can't make 3 tax payments at once. They literally have to be 3 separate monthly tax payments. So it would be a bummer if you are having to go with the FHA loan and you don't have a payment plan set up. In the middle of the process, you get a payment plan set up, but now you've got to wait 3 months because you haven't made payments previously. So give yourself a buffer. Make sure that if you're setting up a new payment plan, you wait till you've made 3 payments or 3 monthly payments before you apply for a home. Also, make sure that you are factoring your tax payments into your DTI, or your mortgage lender can do this, but just be aware that if you do set up a payment plan for your taxes, even though it probably won't show up on your credit, it is going to show up in tax transcripts or on your return, or it's going to be seen coming out of your bank account. So make sure that you understand whatever this monthly amount is, it will be factored into your DTI when the lender is looking at your application for approval. DTI means debt to income ratio, by the way. I always forget to say that. The next step is to get approved. So this is where you're actually going to apply. Make sure that you gather all those documents that you've been, keeping track of. Make sure that you organize all those documents. Like I was telling you before, this is where that starts to really come into play. The basic items or basic documents that you will need is your tax returns. 2 years is typical. So 2 years of tax returns, all pages, all schedules. If you have even one page missing, you are going to have to go search for that page or get it from your CPA. You have to make sure it's all pages of your tax returns. This is big. I see this so much. People turn in the first 2 pages or just their 1040. No, it has to be every single page of your tax return. And as you can see, this is why it's important that you have digital copies, because it's going to be a lot less messy and disorganized and confusing when you are getting all of these documents and papers together. Keeping everything digital keeps it clean and simple and organized, and it makes it so much smoother for the process. Okay, so you're going to need 2 years of tax returns, all pages, all schedules, and you'll need your most recent 2 bank statements. So this is where that part about creating a separate account comes in. Now this is where you want to make sure that you have those clean, beautiful bank statements, all pages, even if blank, your most recent 2 bank statements. And that's essentially the main documentation you'll need for pre-approval. Now again, make sure that if you do have a tax payment plan set up, that you have that documentation, and also that you make sure that your lender is aware of it so they can factor it into your DTI. If they do this in the pre-approval process, it's much better than getting all the way to the end of the process or in the middle of the process of underwriting, and you have to add on a tax bill into your DTI at the last minute, and it throws everything off and it can jeopardize your approval. So make sure in the pre-approval process that you're establishing any tax liens or bills are in your DTI. Now, once you're pre-approved, the overall process works pretty much the same. There will likely be separate documentation that you have to have from your CPA that a regular borrower wouldn't have, but in general, the logistics of the home loan process work the same. If you need more information on how that home loan process works step by step, check out my Guide to Home Buying playlist. I have a ton of information in that. But yeah, then you get pre-approved. If you are not able to get approved, pinpoint why. Is it DTI? Is it documentation? Is it income? If you're having issues with income, then you may need to look into alternative loan programs such as a bank statement program. In a bank statement program, we don't look at tax returns, we just look at the money coming into your bank account. That way you can take deductions to your heart's desire. If you have enough income to show to get approved for the amount you want, then that's all you would need. Just be mindful that if you don't get approved, it's not the end of the world. There's other options as a self-employed borrower that you can tap into. Now, if you guys want me to do a video on alternative loan types like the bank statement program and others, make sure to give this video a big thumbs up and let me know down below. And last but not least, after closing, don't forget to reap the tax benefits. Anyone can actually reap the tax benefits, even if you're a W-2 borrower, but as a self-employed borrower, it means so much more when you're getting these deductions and these credits because it's less you have to pay in taxes. So make sure that when you file your taxes the next year after you get your house, that you make sure you get that tax credit for the interest paid on your mortgage. And not only that, you still want to be mindful of your net profit from year to year to make sure you're increasing and not having a loss. Because say you decide to refinance or buy another house and upgrade later on, lenders are going to be looking at the exact same income factors. So once you buy a house, It's tempting to just go to write-off city, but keep in mind that if you do want to refinance or buy in the future, lenders will still be looking at that net profit from year to year. So just keep that in mind and just be mindful of that as you're doing your taxes after you close on your house. I hope these tips were really helpful to any of you who are self-employed and want to buy a home, or if you are thinking about being a business owner and you just want to know how the process works. If you learned something from this video, I would love if you could give me a big thumbs up and share it with somebody else who you think it would help. Make sure to subscribe to be a part of the HONEYBEE fam. Hit the bell button for notifications so you know when I upload. Also, don't forget to check out the Epson Rapid Receipt Scanner. That thing is a lifesaver. I'll have it linked in the description box below. I love you guys so much. I love you to the bank and back, and I'll see you in my next video.